Bitcoin is now falling below $80,000, and Donald Trump is actually talking about the current market crash. He says that he's not paying attention to the stock market right now, and that's how many people interpret it now. So he's intentionally trying to crash the stock market and, by extension, Bitcoin. There are actually reasons why this might make sense, because the USA has to refinance itself with new debt this year. And if the interest rates here are too high, then it will be very, very difficult. And that's why Donald Trump wants to bring down interest rates at all costs. And if the Fed doesn't do it voluntarily, you can just trigger it through a market crash or a recession, because then you would definitely have a reason to lower the interest rates. But there's also a second, much more likely reason why he's doing this. We'll take a look at that later in the video. On the other hand, there are now also allegations of manipulation because there is currently an inside trader here who has once again perfectly predicted the current crash with a leverage position. We're going to take a look at that, including where his price targets are and where the potential bottom of the crash might be. Michael Saylor is making some huge statements. Deutsche Bank is making some big statements, but it seems like none of it is really making a difference, and the Bitcoin price just keeps falling. But folks, in the long run, nothing has really changed. The whole situation is still long-term bullish. But now let's take a look at Donald Trump and why he's very, very bearish in the short term, and why he's also willing to take short-term losses. That's something you always have to keep in mind. This means that a policy is being implemented here that could be very, very bearish in the short term. Even Donald Trump confirms this. But he's focused on the long game. He's comparing himself to China, looking at the economy in the long term, and looking at the stock markets in the long term. And you should definitely take a page out of that book. I don't want to say that you should listen to Donald Trump, but you should look at the whole thing from a long-term perspective. Donald Trump is now explaining exactly why he is willing to accept short-term pain in order to win the whole story in the long term. Here, to better position the economic situation and so on in the USA. The whole thing was a television interview. Here are some excerpts from Donald Trump. Take a look, and then we'll put the whole thing into context, because these are very important statements that the market is taking a close look at.
Speaking about the recent stock market volatility, Eamon Javers joins us now with more. Hey, Eamon.
Yeah, good morning, Joe. In an interview with Fox News yesterday, President Trump addressed last week's stock market turmoil caused by confusion around his tariff agenda. In one exchange, the president suggested that calls by the business community for clarity on that policy are just a talking point for the big globalists. Here's what he said.
I think that they say that. You know, it sounds good to say. But for years, the globalists, the big globalists, have been ripping off the United States.
And asked if he's okay with the stock market going down, the president dismissed the idea of short-term focusing on the stock market.
What I have to do is build a strong country. You can't really watch the stock market. If you look at China, they have a 100-year perspective. We have a quarter. We go by quarters.
That's true.
And you can't go by that.
So he's pointing out that the globalists have been taking advantage of the USA for years. He's talking about things like maybe no tariffs being used here, so no duties being applied, and that the USA has provided some military services but hasn't really gotten much in return. But that's not the important statement here. The important statement is the one he makes in the next part, where he really says, hey, as president, I'm not really looking at the stock market. Check out how China does it. China has this kind of 100-year time frame, a 10-year time frame, definitely a very, very long period. And we always look here, quarterly on the whole thing, so every 3 months. And that's an absolutely wrong scenario or a completely misguided perspective that one should have as president. So we really have Donald Trump now. And he also confirms here that for now, he wants to accept a lot of short-term pain. But we still know that Donald Trump takes the stock market and the Bitcoin market very seriously. He has also said several times that the share price or the stock prices, the Bitcoin prices here, are very, very important to him. And that's why it's a strong statement when Donald Trump says he's willing to accept some short-term pain. Because all the political cuts he's making right now with the tariffs and all that stuff, and also here that he wants to cut spending with the Department of Government Efficiency and make all these cuts, do all these audits, even wants to audit Fort Knox and so on. Those are all things that can be really, really bad for the economy in the short term, but maybe in the long run, they could be really, really good for him. Because you have to understand that he has 4 years. And if he doesn't start making massive cuts right away, then the whole thing will be pointless. Because if the cuts come too late, then he might come out of here a bad president. That's why you'd rather take the pain at the beginning and then end up in a really good place at the end. Like the other way around, a lot of people are currently comparing what's going on here to Reagan. Because Reagan did it that way too. At the beginning, he kind of brought out the chainsaw. Then the stock market kind of took a dive. And then afterwards, there was a very, very long, booming economy. And maybe it's actually something similar that Donald Trump is trying to do right now. Some people think this has to do with it. that the US wants to refinance itself and that Donald Trump really wants to lower interest rates. And because Jerome Powell isn't playing along and doesn't want to lower interest rates, Donald Trump has to drive the country into a recession, into an economic crash, or into a stock market crash or something like that. If there were a reason to lower the interest rates again, then you could refinance more cheaply. I don't know if the theory really holds up. I don't know if one is really conscious here. A stock market that wants to drive itself into the wall or something like that. I don't want to accuse anyone of that. I actually find the second story here much more sensible. Scott Bessent has also said that short-term cuts are being accepted in order to stabilize the economy in the long term. It's just like this. When you've drifted off course in an economic system, you first have to make those cuts. You have to turn things around. And that leads to a lot of turbulence, like with the tariffs. Creates a lot of uncertainty. And once all that uncertainty with the tariffs is gone, when we know exactly how things are going to move forward, when we have a clear picture of what the economic roadmap looks like, what's the deal with all this Department of Government Efficiency stuff? And if there is clarity here again, then things could look very, very positive for Bitcoin again. And if the global money supply increases on top of that, we could see the trend moving upward again. But right now, we have this massive uncertainty, which is still being fueled by all the Ukraine stuff and so on, because there's still no clarity on that front. That Bitcoin is still being sold off and that we're still in a risk-off mode. What's interesting is there was that trader who really nailed all the Trump news trades with a 50x long position. Now there's a new insider trader making headlines. This one here, let me show you, has set a short position this time. And not just this time on the small drop we're seeing here below 80,000, but on the general declines. So the general sell-offs, who timed this perfectly. Here on the 22nd, in February, you took a short position on Bitcoin at 96,000, and within a week, the price dropped below $80,000. You closed the short near the absolute bottom. Almost perfect here at 78,900. After Trump's executive order, Bitcoin shot up over $94,000. But the trader made another perfect short at 94,424. That means he perfectly timed the declining period twice here. And now we can take a look at where he set his short positions down here. And here we see that he set the limit orders to take profits between $70,400 and $74,100. That means if the insider trader here has any information that we don't have, then we can assume that the next drop, or drop sounds so strange, the next pullback here, it'll end up between $70,000 and $74,000. But like I said, this is more like reading tea leaves. This is more meant in a joking way. You can't just annoy people here. You can't just trade behind random people. Trading in hindsight. You guys need to be very clear about this. By the way, if you're looking for a great tool to perfectly track your taxes, I recommend you check out Coin Tracking. I'll put a link down below for you. Here you can generate tax reports. Here you can also track your portfolio. And the best part is with the code COTEL. Is there still a discount if you sign up for a pro account here? And on top of that, there's a special event happening in the next 2 days. If you sign up down here in our Telegram group, you can just enter your username plus with the hashtag CoinTracking, and you can have your account for 2 weeks. Upgrade to a pro account to test the whole thing out. And like I said, it's really a very, very great tool. You can also see which coins are fresh in the pile and which ones aren't fresh in the pile. So I absolutely recommend it. Like I said, check it out down below and use the code COTEL, then you're all set to go. And on the other side, we also have a lot of bullish factors, like for example here, Michael Saylor here. Strategy announced today that they plan to raise up to $21 billion by issuing new preferred shares. And that's pretty intense. I mean, if a lot of buying comes in again, then we could potentially see some big moves ahead. Michael Saylor seems to not give a damn whether the Bitcoin price is low or high. Many have criticized him for making his last purchases when the Bitcoin price was really, really high, and that his average purchase price is now really, really bad. By now, because he made some really good purchases at the beginning, let's say 2 or 3 years ago at very, very low prices. But the purchases he made back then were relatively low compared to the buys he's making now. And now he's pumped a lot of money in when the Bitcoin price was over 100,000, was at 90,000, 95,000, and so on. And now it has really pulled up his average cost price a lot. Many people find this threatening, but Michael Saylor sees this as just as long-term, just as Donald Trump said with China, who then 10-year, 100-year perspective. And that's exactly how you should view investing. So you shouldn't let yourselves get too worked up, because I keep getting asked, okay, should we buy Bitcoin and so on? I mean, if your investment horizon is long-term, then it's always a good time to buy Bitcoin. And if you really look at it from a 20-year perspective, then it won't really matter to you whether you bought it for $75,000 or $80,000 or $79,000. But if you're just doing some short-term trades or something like that, sure, then the entry price is definitely more relevant. But in the long term, I would say there is only one direction for Bitcoin if we simply look at what kind of debt packages are coming our way here with special assets. And who knows what else? All the war stories that are being planned in the EU. China has announced money printing packages. The US has to lower interest rates sooner or later. They need to stimulate the economy somehow, or something like that. I do assume that. Maybe we need to take another look at the current recession trends in the USA in another video, because there are some very, very exciting background details there at the moment. And then I found this really interesting thing that was posted by the blog trainer. It says here that Deutsche Bank explains in a recent analysis regarding the US strategic Bitcoin reserve that Bitcoin, due to its limited total supply and decentralization, is a kind of hard asset, so they are very, very bullish on it. It also says that Bitcoin has a low correlation with other assets, and that's why it could be a good option for diversifying your portfolio. So this is an ultra bullish statement from Deutsche Bank. So I can definitely just back that up. Bitcoin is a hard asset, definitely harder than fiat money, harder than gold. Bitcoin is the hardest asset there is in the world. And the cool thing is that we also see the correlation with the NASDAQ, we also see the correlation with the stock market and so on. But it's definitely a bit less correlated then. If you were to just throw another stock or something like that into your portfolio. But we must also say very clearly that if global stock markets crash, Bitcoin also crashes down with them. We've seen that again. And accordingly, hey, I see the whole thing pretty chill. All this stuff with tariffs, all this global uncertainty, and so on. It will pass again. The money supply is increasing, money is being printed, Bitcoin is limited. So I don't know where the panic is supposed to come from. I don't see any panic here. And if you want to buy Bitcoin, I'll give you a link below where you can easily and safely buy Bitcoin from 21 Bitcoin. Here, you can still get up to 20% off the fees when buying Bitcoin with the code. Guys, let me know what you think right now. See you later. Peace out.